everybody. We are back for our next week of trying to help simplify mortgages. And today we want to talk about the process of getting pre-approved and, paperwork that you would need and things that you shouldn't try to hide from us because it's going to come up. So, Monica, do you want to talk a little bit about kind of what the paperwork that we would need up front?
Yeah, so traditionally, we usually will send out a list to you. However, things to keep in mind just up front, like if you are a regular employee, like you get paid by W-2, we're going to need 2 years worth of that W-2, 2 years of your tax return, the last 2 months of your personal bank statements, the last month of your pay stubs, a copy of your social security card, a copy of your driver's license, and your social security, we're going to need the application. You can either do that by hand or online. And once we have your social security number, we can go ahead and run a credit report.
Right. And then if applicable, we'd need like bankruptcy discharge papers, divorce decrees, things like that if you have that in your past. So another thing I wanted to bring up, because I've had people try to hide things from me. I just closed a loan that she had heard that tax liens don't report to credit reports to the credit bureaus anymore, which is true. They don't show up on your credit, but they do show up in other places, like on your title and these other reports that we pull. So she didn't tell me about it. And I found out a week or two into the loan. And so then we had to get all this documentation and it created a little bit of a delay. So just be upfront about things in the beginning. There's usually a way that we can, work around and figure it out, but it's better to know in the beginning and not in the middle of your loan.
Yeah, I think the reason that that's important is because, especially when you're purchasing a house, not only could it delay the closing of the house, which would either cause you like having to pay a per diem per day at the end of the closing, but also, you could lose your deposit or something if for some reason the loan's not going to go through. Because when we do pre-approve you, we pre-approve you based on the information that you give us. So, and the information that we find right away. So those are generally things that are on your credit report. Divorces are not on your credit report. Bankruptcies usually are, and we will need documentation for that. But, that one's kind of an easy one. But the other ones, if we don't know about them, that could really mess up your chances of getting the house. And then what if you put down like $3,000 or $4,000 and the seller gets to keep it, that would kind of stink. So.
Yeah. So just so that you understand how we find out these things, the underwriters have their own, they call it a MERS report. Some of them use the MERS report, some of them use something different, but that's how we kind of find these other things that show up. And then also with county records, title pulls all the county records. So if they show a divorce that was filed or something like that, that's how all these things come up and how we find them. It's kind of hard to hide things when all those reports are being pulled. So, yeah.
Yeah. And then once we have gone through your credit report and gone through your application, more than likely we're going to call you with questions on the actual applications, because sometimes some of the questions are kind of weird and you don't exactly know how to fill them out. So we might need some more explanation on them. And, and then we'll run them all through a system, basically one of our systems that will tell you, that will tell us, help us determine how much you're pre-approved for. And then we will get right back to you. And usually we write a letter for you that we would give to your realtor to help you in the search for your house. So it's super important to get pre-approved too before you start searching for a house, because that gives you a lot more leeway when it comes to finding the right house and the seller's thinking you're serious about it.
Yeah, for sure. So, and quickly, that usually takes, once you get your paperwork, for me, it usually takes at least 24 to 48 hours to review it, but it's usually pretty quick to get through, unless your tax returns are large.
And if you're self-employed, right? The paperwork's different if you're self-employed. So usually those pre-approvals take a little bit longer because there's more numbers that we have to play with. So.
Exactly. So, yeah. But usually it's pretty quick.
Awesome. Cool. I think that covers it, right?
Yeah, it does.
Great. Thanks for joining us, everybody, today. And we'll be back once again next week with some more information to help keep mortgages simple for you.
See ya.
Thank you so much for joining Keia and myself today. Our goal is to help you make the mortgage process simple. If you're ready to apply for a mortgage loan, or maybe you're thinking about buying in the near future and want to see what you can qualify for, go ahead and click on the link below and apply today. Please be sure to choose either Keia Blake or myself, Monica Brito, as your mortgage loan officer. If you have any further questions, please feel free to reach out to us via email. Our email addresses are posted below. And if you would like to follow us on social media, you can follow us at the below handles either on Facebook or Instagram. If you like the information that we're giving you today, be sure to like and share, and we will talk to you soon.